Hi, my name is Kevin Brierton, certified mortgage planning specialist with Neo Home Loans, branch manager, and your no excuse lender here at the Brierton team. Hey, this video, I'm going to share with you insight on FHA and conventional loans and help you decide which loan program might fit your needs to buy a house, whether it's a foreclosed house, a new build, or resale. It can help you across the board. So both programs are unique and they have different benefits and requirements, and understanding the differences is crucial to making an informed decision. FHA loans can be the gateway for first-time homebuyers, but a lot of people think FHA literally stands for something around first-time homebuyer. It is not. So FHA loans are backed by the Federal Housing Administration. That's what FHA stands for. You do not need to be a first-time homebuyer for this program, and they're known for being a little bit more lenient around credit score, around debt to income ratio requirements. And these are especially popular for first-time home buyers and also for people with less than perfect credit. They're great programs, and you want to make sure you understand how they are used and how they can benefit home buyers. And then conventional loans are provided and they're backed by private institutions, and they're sold to entities like Fannie Mae and Freddie Mac. Now, conventional loans, though, it's interesting because 90% of all financing, all the money comes from the same place. So conventional loans are Fannie Mae and Freddie Mac, FHA, VA, and USDA are Ginnie Mae. So, and then there's jumbo loans and other private financing on top of that. But a lot of this money comes from the same place. So it's important to understand that there's options, and you want to make sure you get the right option. So conventional loans, they offer greater flexibility, but typically require a stronger credit score and financial standings, typically. So let's look at the difference between FHA and conventional. So when you're comparing these two loans, consider the factors like credit score requirements, down payment, debt to income ratio, qualifications, or mortgage insurance, and then also property standards. So for instance, FHA loans might be easier to qualify based on credit, shorter timelines and wait periods for bankruptcies, for example, lower credit scores are allowed, higher debt to income ratio, so you can actually go up higher in your payment amount based on your income. But they also mandate private mortgage insurance. So the mortgage insurance is paid through FHA is paid in two ways. So it's paid upfront in an upfront mortgage insurance premium, and then it's paid monthly as an FHA mortgage insurance premium. Downside to it is you are really stuck in the FHA premium for life. You can get out of it somewhere around 11 years in some cases, but just think you're going to be stuck in it until you refinance. But sometimes the rate's low enough that even with the mortgage insurance, it makes sense to take. And think about this. If you were waiting to put down a larger down payment or qualify for conventional and you waited to buy, is that waiting going to cost you money in the long run rather than buying an FHA loan and then refinancing? FHA is a great entry-level program, great program for different strategies with low down payment. So if your lender doesn't offer an FHA program, that's a really big red flag, because you need to offer all programs and then tailor it right program. And it's important to understand both of these programs. So I'm going to go over a few things here. So FHAs are a little bit more accessible. We talked about with credit score, while conventional requirements usually require a little bit higher credit qualification for that. And then FHA loans allow a lower down payment, generally speaking. And like I mentioned, they're more forgiving with the debt to income ratio requirements compared to conventional loans. Conventional loans want to have a higher spread between how much your income is and how much your monthly payment is. And then both loans have different structures for mortgage insurance, and that impacts the long-term cost of the loan and the monthly cost. So each loan type has specific limits on how much you can borrow, and this can vary by location, property type, and FHA loans are usually stricter on property standards. They focus on primary residence, so you can't use FHA to buy an investment home or second home. So primary residence only. So whereas conventional, can be more versatile, so you can use it for conventional loans for second homes, primary second homes, or investment homes. And FHA, conventional and FHA, it's important to highlight different properties. You can buy manufactured homes, single family, condo on both types, but they do vary based on, how you have to buy a primary. FHA usually allows a little bit lower, more competitive rates because it's a backed loan from insurance. So that's why sometimes based on your credit score, you're better off going FHA. You might get a better interest rate, better overall cost, even with paying mortgage insurance, because sometimes you'll get a better interest rate because it is a backed loan, federally backed loan, an insured loan. FHA offers a streamlined program. So this is awesome. So it's easier to refinance than conventional loans sometimes. So the FHA streamlined program will allow you to refinance without a lot of documentation and lower your rate. So let's say you lost your job, but the rates go down, COVID, and you might not be able to refinance because you don't have income. Now, a streamlined program wouldn't need income qualifying, so FHA can be really powerful. And even if you have a legacy FHA loan that you lived in and maybe rent out now, you still fit into these programs and stay under FHA and under the streamlined program in a lot of cases. Just because you've transferred a loan into an FHA program doesn't mean you can't use the FHA streamlined program down the road, but it really is primarily made for primary residence house. Now, choosing between FHA or conventional really depends on your unique financial situation, credit score, long-term goals. Considering each loan program and requirement, how they align with your financial goals is really, really important. So whether you're leaning towards FHA or conventional or really just don't know what to do, the key thing is assess your financial situation, choose the loan program that aligns with your homeownership goals. And the important thing is they both have their merits, right? And the right choice depends on your individual circumstance. I think it's important when we put together a mortgage strategy, it's important that you look at all options side by side. And you look at how it's going to impact you financially, it's how it's going to impact the offer. Maybe an FHA loan won't work because of certain FHA rules. One of the things that stands out, I'll point out here, is FHA flip rule. If a house is sold within the last 90 days, you generally can't use FHA. So that's something to be aware of, and that'll hold you back. So if your lender has qualified you for an FHA loan and you're looking to go buy maybe a bank-owned property or foreclosed property or property that was recently foreclosed on and then flipped to be redone and sold, might be a great property. You might not be able to make an offer on that if it was sold within the last 90 days. So just be aware of how you're setting this up, and they all have their advantages and disadvantages. So thank you so much for watching. We're super passionate about educating you, guiding you along this journey. Choosing between FHA and conventional can make a difference on so many different levels, and I really hope this is helpful for you. If you want a personalized plan or personalized advice, go to mortgagestrategycall.com, and we'll craft a strategy for you as certified mortgage planning specialists that fit your unique goals, put a side-by-side comparison for you so you can make the best decision and a clear mortgage decision. And we're super excited. If you know anybody that can benefit from this, we're excited to help them as well. Please like, share, or comment, and I'll jump in the comments as well. And thank you. Thank you for watching. We appreciate you. We'll keep the videos coming. Again, Kevin Brierton, Certified Mortgage Planning Specialist, Neo Home Loans with the Kevin Brierton team, your no excuse lender, and we'll catch you on the next video. Thanks.